Good morning. This is Jimmy here this morning, and today we are going to talk about traders and the markets. So, what are traders? Traders are players, people that want to be part of the market, right? So, I call them market participants. And for me, the market or the markets are a system. So, it's a system that's created for people to be a part of. So, if we're talking about the market, we also have to talk about why the market is so special. Because the market is special, first of all, is because you have different players or different participants, which create different behaviors on different day, on different occasion when people come into the market to be part of the market. So the market is not only special because of different people that are part of the market, which create different behaviors. It also you also have to talk you also have to take into consideration different economic calendars. Economic calendars are one of the most driving force in the markets when it comes to financial fundamental analysis of the markets because that will help players or traders focus on the strategy or when they have to apply it or when exactly to enter into the market. So it's not only important to focus on different behaviors of the market participants, also look at the outline or the outcomes of those calendars. But because of those two driving forces, the players or the market participants and the economic calendars of the markets, so you have different outcomes because traders will think differently based on different um, calendar, everything that's going in the market at the moment or for the week, for the month. So because of this, all this combined, make us think about that the market is not something that is stagnant. So the market is always moving. So as a trader, you have to position yourself to be on the side of the market, on the side of the momentum of the market, either uptrend, downtrend, or ranging. So you have to know if you want to trade forex or whatever pair you're trading, or if you want to focus on commodity, for instance, gold, or if you're trading cryptocurrency like Bitcoin, Ethereum, and so on and so forth. So you have to know what's going in the market, what are the driving force of the market, what are the trends of the market. Is it trending up, trending down? Are you in a ranging market? What's going on in the world when it comes to geopolitically? So all this stuff, if you're not aware of them or if you're not familiar, if you didn't familiarize yourself to them, so you have to be ready. So as a trader, in order for you to be ready, first of all, you have to unlearn. Not necessarily come up with a new system, but find ways based on the driving forces how you can position yourself and your system to be successful. So that's very important. Second, you have to relearn. Relearn, it's always important. I think that's anything in life. You have to leave room for you to improve. You also have to be someone that is very open minded when it comes to everything in life. So when it comes to trader, you also have to think about those things. So relearning or the most important things here I would like to emphasize is market feedback. Market feedback, you can understand it based on the factors I mentioned before, as far as economic calendars, driving force of the market, behavioral um, analysis of different traders in the market, based on sentiment analysis. You also have to, don't ever trade in the bubble. You also have to think what's going on around the world. What's going on in different markets. The stock market, how is the stock market related to the currency market? How the currency market is related to commodity market? And how commodity is related to crypto. Believe it or not, everything is related or correlated or interrelated or inversely correlated in the market. So you have to know how to navigate through those markets as a trader, and that's very important. So the market feedback, as I talked before, for you to understand it, it has to come with a period of backtesting. Backtesting will help you to forecast the market, but what backtesting will help you with, it will help you, backtest historical data. It will also help you, since history tends to repeat itself, so you can position yourself to be successful when you see certain pointers in charts. So that's why technical analysis is important, not because technical analysis is the gospel or is the only thing you have to focus on, just because since you have repeated events, that tend to occur. So technical analysis, so based on your backtesting system, it will help you to pinpoint those moments. So as a trader, you also have to focus on your system. You're planning your day, planning your system, planning your week, or even a quarter. And also, you have to be open-minded. Not only you have to be open-minded, but I know as a trader, everybody wants to be profitable, which is okay because you don't want to be like a loser. You don't want to lose constantly. If you have a system and you lose more than you win, then it's probably a good day, probably a good time to review it, or maybe change it altogether. So it's really up to you. But it's always good to have a system. It's always good to focus on system. Also, as a trader, you also have to want to trade less. More doesn't mean um, better. So quality is always better with quantity. So always think about the percentage of your return. Do not focus so much on the amount of money you're about to make, but see first of all consistency, how consistent is your system, and second of all, how much percent of return you're getting from your system, because that to me is more important than the dollar amount or the target that you may have, because percentage to me is better than the dollar amount because of compounding effect. So that will take care of itself over time. So always focus on dollar amount. Sorry, excuse me. Always focus on percentage rather than dollar amount, and also stay true to yourself. Don't um, don't overtrade. Quality is always important. So as a trader, you always have to think that you have other people in the game. You always have to think about the driving force of the market. So the market is always ever is it's an ever evolving thing. So don't ever trade in a bubble. Always think about other markets, what's going on in the stock market, how is it related to the market you're trading, and don't overtrade. Less is more. Smart investing or smart trading is better than I'll say crazy investing or not knowing what to do. It was a pleasure to be with you today, and don't forget to subscribe and like, and I'll see you next time.